welcome to our webinar today. We are excited to be presenting to you here. So this is the third in a series of webinar topics that we have related to the Pinnacle model. It's not a prerequisite, so if you haven't seen the other ones, you're fine, but I would encourage people either through our YouTube channel or through Earmark CPE to go ahead and check out those two, because I think you'll find them really good. I'm hoping people are looking at this from an opportunity to say, okay, how could this help me in my own firm or organization? And then also, how might it help people with their clients? Tom, you can go ahead and bring up the slides. So let me go ahead and introduce myself. I'm Tom Wadelton, and I'm a virtual CFO with Summit CPA Group. So in that role, and Kristen does the same role in introductions in a second, I do business consulting with clients. I've got 17 clients and act in the capacity of their CFO, so very much in the financial advising world. Let me take care of a couple administrative things. So today is a 1 CPE course, and we need people to attend all 50 minutes. I'll launch 3 poll questions. You need to answer all 3. Usually I don't announce when they launch, so be paying attention for that. We do send out the CPE certificates and also replay slides. So those will go out. And finally, to interact with us. So people are on mute today, but we do have the question function. We really encourage people to do that. As much as we can, we're going to answer those during the session. Most of them live if they fit in with the topic. Some of them will just type in a response for that. So please go ahead and do that. I will mention probably the most common question is, can I get the slides? Are there slides? Do we get the certificate? So yes, those go out. I mentioned I work for Summit CPA Group, so let me tell you just a little bit about us. So since 2004, we have been offering back office and VCFO accounting services. In 2013, the firm made a couple of pretty significant shifts. One, as you can see on there, was to be a fully distributed firm. So no more office, remote workers, remote clients, the tons of flexibility we realized from a geographic perspective. That was also when we really focused on VCFO and advisory services as our practice. So I have been doing this for a long time. And then at present, and starting last year, we did a merger with Anders CPAs Advisors. They're a St. Louis-based firm, and so we are now a hybrid firm as they have an office, and then we're the remote workers. So let me introduce you to our speakers then for today. Tom Barrett, co-founder of Navigate the Journey. He's also a Pinnacle partner. I'm sorry, not a Pinnacle partner, a Pinnacle guide. Tom, welcome to our webinar today.
Thank you.
For full disclosure, and I think this is a wonderful thing, Tom is the Pinnacle guide that works with our company. So we've got a lot of experience working with him, and also our firm is a Pinnacle partner. I've introduced myself. Kristen Reinking is a peer of mine. She is also a virtual CFO, very experienced when it works very much within our chosen niche, which is digital agencies. Kristen, welcome.
Thanks, Tom.
And then Adam Hale is a co-founder of Summit CPA Group, had done the virtual CFO role for a long time, and now leads our virtual CFO practice. Adam, welcome to you.
Thanks for having me. So Tom's going to keep us on our toes here with his slide deck here.
He is. It's fighting you, isn't it?
Oh, it is. Yeah. It's not
so Tom, I'll start with a really important question, the Coldplay song. So is there a reason you chose, did you choose that song or just the group Coldplay?
Yeah, because I think you all wanted, some music for
Sure.
the open up these webinars, and I was a big Coldplay fan over the years. So,
and I think I remember that song. Not to turn into a long tangent, but am I right? They got sued for supposedly stealing that song. Sounds unfamiliar. Okay,
yeah, I'm not that big of a fan, Tom.
yeah, okay. I think I remember that and learned some about it. And they played the here's what they supposedly stole, and you're like, it does sound the same, but then you learn a lot about how difficult it is to pull out, 3 or 4 notes and say that was my song they had. But after that became a huge hit, that's what happened.
Yeah.
Okay, back to our regularly scheduled program. Yeah. Why don't you help us jump into Pinnacle and the model and what we're doing?
Well, I will make a connection to what you just said here in a minute to what we're looking at. So yeah, so what is Pinnacle? It's a comprehensive blueprint to scale any entrepreneurial business. And in some of the ways that it's different, because there's a number of different systems out there that do this, and I'll show you an overview of those in a second. But Pinnacle, one of the ways it's different is very customizable operating system. So kind of really takes a best of the best approach and offers up some kind of fundamentals, timeless truths, just principles that are out there generally, and then kind of builds best of the best customizable approach. Mm-hmm. And then pulls from this endless toolbox as well. So in terms of, who is it right for? So again, with our audience today, CPA firms, just general business owners. So probably for the CPA firms, like for your firm, your own CPA firm, but also as you work with clients, you can use these principles. So who Pinnacle is right for? So privately held businesses generally work best. There are a few exceptions, but generally privately held. Open to new ideas. That's really important. Being willing to be open and honest, or just transparent, as a leadership team. Be willing to be coachable, right? To be challenged by these new ideas and constructs, and then just committed to growth, wanting something, bigger, better, bolder, for your business. And so if you tick all those boxes, then Pinnacle's definitely worth, checking out. Kind of the brand promise of Pinnacle is really a category of one. So especially for businesses that really want to climb, their business mountain. So, over 5 years, 5x your business, right? Simple, back of the napkin, grow revenue 2.5 times, 20% a year, double your profit margins, at a high level. That should, 5x your business over that period of time. And the Pinnacle tools allow you to get there. So the context really then of Pinnacle is that it really is pulling from the best of all of these various systems that are out there as it comes to the profit. In terms of what we're looking at today, I would say the great game of business, mastering the Rockefeller habits, and scaling up are probably the only 3 that really kind of talk about what we're about to talk today. The others don't as explicitly talk about profit the way that Pinnacle model does.
And Tom, I just launched the first poll question that does ask people, of those 6, do they have one that they particularly favor in there? So for the audience, you got your first poll question up.
Yeah, great. And and again, these are all great systems in and of by themselves, but Pinnacle takes the approach you don't have to just pick one. We basically just kind of pull from the best of all of those systems. So there is a book, highly recommend that you get this, written by Greg Cleary and Steve Prada. So it's on Audible too, but everything we covered today is going to be in there. So the prior 2 webinars, we did People and Purpose, and we also did Playbooks and Perform last time. And so today, the big idea is really when you have the right people, right seats, performing well, they're inspired by purpose, the strategy and the vision where the business is going. You've got these optimized playbooks or processes that people are following. You have a culture of high performance. You add all those things together, right? Really, the end result is profit. But we're going to unpack how the Pinnacle model does help businesses with profit. So 3 practices: benchmark, engineer, and sustain. And we're going to unpack each of these. So I love this quote from Jason Fried. So he says, "A business without a path to profit isn't a business, it's a hobby." And I think the way to maybe expand on this is that, I would say maybe a business without a path to really the profit that you desire, or industry leading profit, maybe isn't worth it, right? Why spend all that blood, sweat, and tears and all the risk you take on as an entrepreneur if you really aren't getting that profit level that you really desire? So that's what we're going to look at today. So the first step really is to benchmark. Right. So what is great for your industry, type of business, maybe even stage of business, things like that. So that's really the place to start. So I want to turn it over to Kristen or Adam. So how do you help your clients kind of get a handle on this when you first start working with them?
Yeah, I think benchmarking is important. From an industry perspective, everybody wants to kind of know what everybody else in the industry is doing. It can be, again, it's just guardrails though. So whenever you're talking and consulting with clients and customers, there's a lot of different great resources out there that pull from the NAICS codes, which is just a fancy way of saying all the tax return data. So it's really good to be able to grab that industry stuff. But depending upon which industry your clients are in, there's also a lot of great association resources that'll talk more specifically and dig into not just the broad financial numbers, but give you some more things in terms of head count and break things down by geography. And there's really some cool ways to do that. And again, the way we utilize this for our clients and our customers, whenever we're, and this is an example of some kind of areas here for creative agencies, digital agencies that we work with. What we do is whenever we look at their financials as part of the discovery process, we can see what they've done historically for the last couple of years, and we'll put it up against these and say, these aren't hard and fast by any means, but let's just see if there's an area where we think you're out of bounds from your competitors, and let's understand why you are. Because there's, depending upon, for instance, in a creative agency, what you might find is we have production costs there that are right at 50%. Well, sometimes early on in an agency, that's closer to 60%. And then as they scale and grow, it leans more into the 50%. So again, we use these as guardrails and navigation tools for our clients just to guide conversations about understanding, hey, why are you spending 25% on sales and marketing costs? And they're like, well, because that's what we've always done. That's not normal. And we're like, no, not normal. That would be atypical. Let's talk about what that means and what it's doing to the bottom line. Profit obviously being the topic of today. So
yeah, and the one way that I have used this recently, I had a client who there were 6 partners in the client, and this one was in charge of the sales and marketing team, and they were not performing really. And so he wanted to hire someone. And his argument with me over and over was he wanted to hire someone with more costs than what I thought was reasonable. And it was really getting contentious, and using this. And so what you're seeing here is what we propose to our clients, and is close to the average of what we see across our clients. So I first was able to convince him that 10 to 15% spent on sales and marketing was reasonable. This is what your clients are doing, things like that. And then when we put it in, we said, okay, you're sitting at 20%. Look what it does to your profit. And why is it that you have to spend 20% and your peers can spend 10 to 15%? And it was actually the one that kind of swayed the decision and helped it get away from me arguing against him to, hey, here's what your peers are doing. Why would it be that it's harder for you to do it than others?
I've also used these guardrails really when you have an agency that's a certain size, and let's say that you have to reduce headcount. And so headcount oftentimes comes from the production group. However, you also have to keep those below the line in sync with it. And so these parameters and kind of help guide as to which levers to look for, what areas to really search out for changes.
Kristen, what about some of the benchmarks we use that are non-financial, like with your agencies? Can you make any comments about what are some of the things we share with them?
So the non-financial benchmarks usually have to do with a capacity, because we're limited by capacity. It's driving the revenue as well as the cost of sales. So when you're looking at that 50%, it's really driven by just that non-financial of the people. Our people in a service industry is just really, really, really key. Yeah. And what's interesting there is there are levers even within that, or benchmarks. And I think Tom's presentation goes into it a little bit, but keeping in mind, so this presentation is showing the minimum of 15%. So I have agencies that go all the way up to like 32%, maybe even a couple a little higher. Sometimes, like Adam referred to, you see it at the very low end when all the owners are very active within the business, and so creating that really high gross profit and running very lean, because basically their hobby is turned into a business by accident. And then suddenly they go through growth, and then go through the leaner times of 10 to 15%, and then can come out on top around that 30%. But these guardrails are still really good ratios to be able to help drive the business decisions and know where to look to be able to make sure that everything's in sync.
Great. Yeah, one other thing I want to add too, that I find when I'm working with like the non-CFO or maybe a non-owner on a leadership team, they're often just, when financial results are presented, they often just don't know, right? It's like, oh, is 3% net income good? Or, oh, if it's 25%, what does that mean? Right. So I think benchmarking is a great way just to level set for everybody, all the key leaders in the business, just to sort of help them understand, again, are we above or below what is reasonably expected for our kind of business. So yeah, so this is a lot of level setting. So yeah, and then I know you all do a lot probably with owners compensation as part of benchmarking. So how do you typically do that?
Yeah, I mean, we're pulling in industry data depending upon, where we're at with that. But in terms of if we're working within creative agency or where we have a sample size big enough, but you can also pull it from sources like Paychecks or PayScale and other places like that. The problem with some of those is, again, they kind of get distorted a little bit. So the big thing whenever you're benchmarking owner's compensation to keep in mind is what role is the owner playing? So in some instances, especially in small business, we wear a lot of hats as owners. And so are we primarily in sales? Are we in operations? Are we doing production? So making sure that we're distinguishing first with our owners, like, what are you really doing the majority of the day? Because what we're going to benchmark about is related to replacement cost. So you earn money for, you make money on what you do, but you earn money on what you own. And so making sure that owners understand the difference between that. And basically what I'm saying there is, like, your paycheck is for the thing you're doing every day, but you might actually earn money on owning the business. So making that differentiation, whatever you're looking at some of these benchmarks, because if you come in and a client's making no profit, but it's because the owner's taking $1 million salary, well, okay, they're not going to replace themselves for $1 million. Vice versa, sometimes you'll come in and there's, it's the opposite of that. And so you got to just make sure and talk to the client. And so we do have, kind of, again, if you're operating more in that CEO role, it will depend on the size of the company. So if it's like a $5 million company, we're usually shooting for 175 to 225. If it's a $10 million company, it's moving from 250 to 350. So it's a sliding scale depending on the size of the company, but it also depends, are you the CEO or are you the COO, or are you like the head of production? What replacement role are you really filling in the company?
Great. All right. So that's kind of the first part, right? And helping, optimize the profit is benchmark. Now we're going to get into this second practice of engineering, right? The profit you want. So again, you've kind of level set it, right? This is our actual results. This is how we compare to, industry norms. So now what are the levers that we can pull to get that profit level that we do want. So we're going to run through 7 of the most popular levers you can pull in any business, right, to get the profit you want. So first, simply increase prices. This one, I think, especially over the past, what has it been now, 2.5 years or so, obviously when inflation being higher than it was, a lot of increase in costs for business coming through from salaries to materials. Obviously, pretty much almost every business on the face of the planet has been doing this quite a bit over the last few years. So we've all got, I think, some really relevant experience recently on this. So again, Kristen, Adam, love to hear how you've helped your clients, maybe especially over the last 2 or so years on increasing prices.
I'm going to give you a kind of a counter example to increasing prices, because again, this is what most people think of, and it's like, hey, I need to make more money, I need to increase my prices. In some instances, especially in professional services where you're not as efficient as you need to be, you might find that, you can show them in a modeling scenario, hey, if you increase prices $5 or $10, whatever it is per hour, this is where your profits will be. But in some instances, you can show them that, hey, if you actually just received in a professional service business, if you actually just receive what you say you're billing, your realization number off of what you're getting, you actually don't need to increase your prices because you're not actually achieving that anyway. So if you're asking for a $200 hourly rate, but you're only averaging, whenever you're doing your metrics, you're only averaging $180 an hour, it's not that your 200 needs to go up to 220, it's you need to close the gap between the $180 and $200. So that's kind of the one thing that we look at whenever we're doing this analysis. But the other piece of it is, and I know you've got a model that you'll kind of share with with everybody a little bit later, but being able to show them even the impact of $1 or $2. So whenever you're talking to salespeople, they're like, I'm having a hard time selling this product for X dollars or whatever. It's like, well, here's the thing, is this is how many we move. So if you can kind of show them that, and you can say, if you just were able to get $5 more out of each one of these things, here's the impact on the bottom line. And whenever they see that, they're like, oh, oh, well, I can get $5. And then it's like, okay, well, then it opens up the conversation. But it's all has to be, increasing prices has to come with a lot of context, because again, our job is really to work with sales, operations, and we're finance, of course, making sure we're all under the same, kind of working in the same direction. And whenever we throw out things like, hey, increase prices, everybody just kind of, eye rolls and they're like, of course. But again, there's a lot of different conversations about efficiency, about just moving the needle a little bit. Also, this is an opportunity to talk about how your costs have changed over the last year or so and making sure that you're pacing well with that. And then, you can look around and talking about benchmarking before, there's, I have clients that are in the trucking industry. So we're constantly going out to the industry and trying to figure out whatever all the competitors are charging for their rates to see if we need to adjust and kind of keep pace with the industry as well. So broad conversations with just, rather than just saying, hey, let's increase it by 3% or whatever it is.
There's definitely a lot to it, just like Adam was talking about, that you're really restricted by what the market will bear. But a lot of times, unless you're looking at industry averages or like a part of some group where what your competitors are doing, you don't know what you don't know. And so, like, for instance, a lot of what we do is we use the knowledge that we have from, the rest of the people that we service. And basically, we're able to provide some guide rails around it. And essentially, in the last, I'd say year, most companies, agencies have increased their prices by like 10 to 15%. And so regardless of whatever their starting number was, that's really where they went. And so it was like, well, if they can do it, then others can do it. And so they start pushing it towards, their sales and marketing to see if the market will bear it. In most cases, it will, because since everybody else increased it, then of course, then the market will bear it because that's who their competitor is. In some cases, when people first come to us, they don't know what they don't know, and their prices are so low, it's unbelievable. So really just trying to get those guardrails, understanding what normal is, and back to that benchmarking. It wasn't, talking about prices specifically, but, that's really important, is knowing what others are doing as well.
Kristen, I love your comment about clients that come to us, because I think most accounting firms find the same thing. It's such a common thing of people in the accounting industry say, I'm not charging enough, and they know it. And this is a huge lever that they can probably take advantage of.
Yeah, and I would imagine that you would find that this, because we have 6 more levers to go, but I would imagine that generally speaking, this, of all the levers to pull, this is the one that's going to get you the biggest bang for your buck, right?
Generally, yeah, it can. It's going to lead to a lot of conversations. There's a lot of consulting opportunities, I think, around price increases. A lot of good conversations. Yep. Absolutely.
Yeah, because like, why can't we, or what would it take, or what kind of clients do we need to go after, industries, things like that, or services. So yeah, then the second lever that you can pull, right, is cross-sell and upsell other products or services. So again, just maybe share some stories from when you're working with a client, and after you've gotten onboarded, understand their business, when you're trying to help them, right, take advantage of their capabilities and reputation in the marketplace. How do you help them think through what they could cross-sell or upsell?
Yeah, I think
you asked about clients. Let me just use us as an example, Tom, because it's not uncommon at all for us when we take on a client that someone may say, I love my tax person, so let's not do taxes. And we're saying, totally fine. Here's how we can provide our service. 3 months in, they're saying, it really is easier if I work with one person versus that. Can you tell me what that would take? And so we try to make that as easy as possible to say, of course we can. Let's just show you what pricing would be. Same thing. I love my internal bookkeeper, things like that. And so that's one that we are ready for. And I think the one thing that we try to do, like I said, is try to make it as easy as possible for them to say, and do you like this idea? Then yes, we can transition into that.
I think one of the tools that I've seen here that is a great consulting tool, one of our CFOs actually brought it from another company that he worked with, but it's like white spaces, I think is what he refers to it as. And so the exercise that you walk through with the client, or what the client should do, is list out all their customers, going down one side of the board, and then you fill out all the different services that you provide going the other direction. So if you provide 3 or 4 different services, and then you kind of put check boxes in to see where everybody's kind of filling in, and then you kind of take a step back and you look to see where there's openings or where there's these white spaces where, hey, customer's doing 3 out of the 5 services and this customer is doing 2 out of the 5, that kind of a thing. And you can kind of step back, and that really is good information for the sales team to see, for the owners and for operations to see and go, hey, why wouldn't they want to have this or this service or that service? And it's a really good opportunity for, again, operations and sales to get on the same page and say, no, you know what, that customer probably does need that stuff, and we can have some conversations. So that's from a cross-selling opportunity standpoint. That's a consulting tool that we've used with our clients and has really helped them out trying to figure out how to just drum up some internal organic sales.
A couple of items regarding this, especially, during the pandemic time, we used to be able to say that new business would account for, I don't know, 50% of the sales for the year. In the past couple of years, that has really not been the case. Most of my clients get most of their business from their existing clients. So being able to cross-sell and upsell is incredibly important, and continue and develop that relationship. The other thing that they really lean into is retainers. Anything recurring in nature is always more valuable. And then just kind of like if they do a website and then just make it an extension where they can have a retainer where, they maintain it for, X, for a year for X amount of money or something of that nature. Just always thinking of those different products to be able to sell and upsell. And finally, one other example is, it feels like a lot of my clients, they're service-based, but yet many of them are developing products, like literally products that maybe complement what they normally do. And so that is something that a lot of people have gotten into. And a lot of times it really is, they'll take something that they do time and time again, and rather than recreating the wheel, they'll create some efficiency or standardization to it where they can charge like a value pricing of X, and then it'll be basically here, and then there's just a little tweaking to go. So that's always a good opportunity for businesses, at least in the digital agency arena that I'm in.
Mm-hmm. Great. So the next lever that you can pull, right, to engineer the profit you want is reduce operating expenses. So again, love to hear stories. Maybe start with Tom this time. So how do you help clients, get a handle on and even reduce their operating expenses?
Yeah, this is the one I think they expect us to do. You're the finance guy, so you'll be really uncreative and say, cut your cost. I'd probably first go back. The first thing we look at is that benchmark in there, because that can really give you a good measure as to, does it look like your administrative expenses and your sales and marketing are out of whack with everything else? One of the things that we often do see is, as a company is really small, the owner's kind of doing all of those roles. So they end up having very low overhead. And then as they grow, they start adding people. But it's not uncommon that they add too many people, or they add quicker than what their top line goes under. And so then that initial conversation is, look, you've got the size team that your top line should be X. Say it's $3 million and you're sitting at 2. That's why it's so heavy. If we don't see a path for ourselves to get to 2 to 3, then here's where we need to cut. And maybe that is switching from a full-time employee down to a contractor, and say maybe you can do with half of a time for kind of a back office solution. There's some low-hanging fruit that I mentioned also. Often subscriptions like software and things like that are easy ones to say, let's just show you what you're spending, and maybe you realize, oh, we put that on credit card and no one's using software X anymore. Let me cut that. And those are nice ones to catch, although usually that doesn't tilt the scale, but it's still nice not to waste $500 a month if that's what you find.
Yeah, just end of the month, good opportunity, Tom. Just to look through historical information, where you're at currently, and more importantly, what you benchmarked it to be for yourself in your financial forecast, and just ask questions. A lot of times you don't even really have to point out anything too crazy. You just say, hey, these are the 3 big outliers year to date. What's going on here? And they'll be like, I have no idea. So you have their accounting file up on the other screen, you show them, and you're like, oh, it looks like you're doing X, Y, and Z each month. And they're like, oh, wow, that's way higher than I thought. And immediately they pull up, they're shooting off an email or making a note to talk to somebody afterwards. So yeah, to Tom's point, that might be kind of what they expect us to do, to say, hey, cut operating expenses. But, a lot of times whenever their sales do go down, we're like, hey, you're not really heavy anywhere except for sometimes on the people side, or people are usually pretty good about doing this stuff, but it is a good practice just to getting the muscle memory of doing it every month and every quarter, just diving in certain places.
Yep.
I think they did a great job summarizing. The only thing that I could add is just the two categories of office supplies seems to be a big one. It's kind of like the dumping ground. And so sometimes people don't realize how much they're dumping in the dumping ground. So to keep an eye on that and the size of it, and then just travel, just because travel costs have just escalated so much, that's a good area.
Yeah, that's a good point. All right, the fourth lever, exploit economies of scale. So this one is might not be the most obvious. So how do you help your clients see through the lens of exploiting economies of scale to get that profit level they want?
Yeah, I mean, I think this one, using our own firm as an example, is that, what you would expect, you have variable and non-variable expenses in a company. And so obviously the variable things like production, especially if you're in a service-based business, or even if you're in manufacturing, construction, you're going to have either, materials and people that will naturally progress as you grow your business. But one of the reasons to get big or to scale your business, to grow, is outside of obviously not having to wear 10 hats for yourself. That's a huge benefit as well, but to be able to exploit the economies of scale. So there are certain things operationally or from a marketing perspective that if I added 1 million or 2 million or 3 million to the top of the line, I'm not going to have to make that investment in the operational expenses. And so by being able to grow the top line, and you can kind of show them, hey, if we can kind of level set this or grow disproportionately, meaning we'll have some incremental costs down here to office supplies and those kind of things. But if we can run, a lot faster pace up top, keep our margins, in terms of our gross profit and everything, and just leverage our overhead, you can see that money just drop straight to the bottom line. So for us, we can see where, whenever we were a much smaller firm and we were growing, we're like, hey, the bottom line, we're making all these investments and all these processes and operational expenses, but we could see that as we started to pick up clients, we weren't having to make that same proportionate investment. So we could easily, whenever we were putting together our 3 to 5 year forecast, a lot of times where we were seeing our profitability increase wasn't necessarily from cutting costs or being more efficient with our labor. It was just not having to scale up those operational expenses.
Yeah, Sorry, go ahead, Kristen.
I definitely see that with my clients as well. On the first slide, we kind of mentioned the fact that some of my clients hit like a 32% bottom line. That's not because they've slashed everything. Essentially, what they've done is they've outpaced their G&A expenses. They've grown to a size that, the number at the bottom is still the same or relatively the same, maybe with some small growth, but the denominator is so big that what happens is it's a much smaller percentage, and you're just getting a lot more to the bottom line. It's just flowing straight down. So exactly what Adam was talking about.
Yep.
Great. All right. The next lever, the power of one. So this is a software actually that as a Pinnacle business guide I have access to. So it comes from an organization called Cash Flow Story. That's what the software is called overall. So this works great on a number of fronts because the inputs are really simple and easy, just high level income statement, balance sheet. And this particular tool that's on the screen is just one of the modules that the software has. And so what it does is that, especially for the non-financial, members of a leadership team, or just helping a client see the interdependency of these 7 variables, right? If you say increase price by 3%, well, we're going to assume volume is going to go down by 1%. And you can start scenario playing right there with them, the impact on net cash flow and operating profit, taking the prior 12 months sort of the baseline, and then the impact of, so 1% changes up or down in price, volume, COGS, overhead, and then 1 day changes up or down in AR days, inventory days, or AP days. And so, I'm not a financial person primarily, but this tool, and even working again with lots of leaders that are really not also financially as savvy as they would like to be, but this tool basically I think ups everybody's financial game, because it kind of gets everybody on the same page about what really those different levers that we can pull. And it's not a theoretical conversation, or it's also not a conversation like, oh, we're going to go off and look into that, run some analyses. It's like we do it right there with an entire team. So how do you all approach having this more kind of holistic approach for the clients?
Mm-hmm. I would add two things to that, Tom. So we do a forecast with clients, and usually it's up on the screen in front of them. So that's one way to say, let me make changes, and we can change price and things like that. We also have an internally built tool called the scaling document. And for many of our clients, not that different than an accounting firm, a lot of their revenue is based on billable hours and a rate that you charge per hour. So as Adam mentioned before, in that tool, you can easily say, if I change this by $1, here's the impact on your profit. And the same if I change the billable hours. So you're telling me people should work 30 billable hours in a week. If you can add 1 hour, what's the impact on that? To me, I think one of the biggest thing that finds is, I think people have in their mind, if I increase prices by 10%, all my problems go away, right? Suddenly I'm profitable. And you may show them that that's not true. And it could be the same thing, that people aren't working hard. No, let's add 2 hours. That'll be wonderful. It might, but when you add those two, you're maybe surprised it doesn't do quite as much as you thought it would.
Yeah.
From a consulting standpoint, this concept is extremely important, because whenever you're looking at a balance sheet, whenever you're looking at an income statement, it gets overwhelming really quick, especially if you're breaking out months. The simplicity of this is really its power, and bringing those conversations between, again, sales, operations, and finance. We can say, hey, we think you should do this, and here's the impact. And I love how this one shows not only operating profit, but also impact the cash flow. Like if you're changing AR days or AP days down below, some of those things that don't necessarily move the needle on profitability, but if you're going through poor cash flow, you can show them how even just small changes there can make a big deal. And for us, we have the net income on that scaling doc. It's in like font size 20 or something. It's really big, and it's at the top of the screen, not at the bottom, because as we change those metrics or those levers that you have to pull, you can quickly see what the impact on the net income is. And that's really, really important. And so to be able to have a very high level, simplistic view. And again, we do it not only with some of these things, but we'll do them also with their metrics that are important to running their business, whether it's revenue per head count or average bill rate, those kind of things. So anything that you can do to boil it down and make it super simple with a one-page view like this is extremely important.
Yeah, great. All right, I'm going to move on for sake of time. Number 6, focus on the most profitable clients, products, or services. So that's the 6th of these 7 levers. So Kristen, how do you help your clients do this?
Well, I guess the most profitable can a lot of times be the retainers, just because it's a recurring amount every single month. Sometimes you're going to overservice, sometimes you're going to underservice, but creating efficiencies within them and just trying to service them as well as you can, as efficiently as possible, can lead to very profitable type situations.
Yeah. And I would say making sure you understand what job profitability looks like is probably the most, sometimes it's either not looked at or it's not looked at the right way. So I think mainly just making sure that this is an advisory standpoint and something that you're looking at on a monthly basis is important.
Tom, I think in there that focus can be, if you look at the least profitable, how are you going to do that? And maybe it means getting rid of that client, or if you're doing price increases, you might look and say, for this couple of clients, is it a 30% price increase? Because that's what it takes to be profitable. And yes, they might leave, but at the profit margin where they are, we're probably okay if they leave and we can replace them with a different kind of a customer. So I think that's part of it.
Yep. Great. All right, the 7th and final lever, drive operational excellence. So, this actually tracks back to what we talked about in the last webinar. I think especially, right, having those playbooks or SOPs written out, followed by all kind of that relentless war on waste within the business. So what are some maybe tangible things you all do with your clients to help them drive this operational excellence.
One of the things for me that comes up early is as you're trying to help gather metrics. So if they have some kind of a company scorecard, and I've got one currently that has for their operations team probably 20 metrics. And when I first came in, I said, this is too many. Can we get it down to these 3 metrics? And they're really having a hard time. So that's forced us to have conversations about why is it so hard to come up with a forecast for you? And then you'll hear we've got these 6 different systems. And so that kind of thing is one of the things that we often dive in and say, oh, this seems different when it looks really hard and other clients can do this easily.
Yep.
Yeah, I agree. It's all about, the metrics and, you move what you measure. And I think that, I think if you have non-financial metrics, I think it points out some of these places where clients have an opportunity to improve.
Yep. Great. So we've looked at the first 2 practices of benchmarking. We just looked at engineer, right, to pull those levers to get the profits you want. Now we're going to finish off this with looking at sustaining. So presumably you get to the profit levels that you want, right? How do you sustain and, not fall off the mountain? So there's a very famous book, Good to Great, really classic business book, because the underlying principles in the book still hold up, despite the fact that some of the companies that were profiled as companies that went from good to great actually either no longer exist or fell on some hard times, probably the most famous being Circuit City. And somebody actually wrote a book called Good to Great to Gone to kind of chronicle, they're falling off the mountain and no longer existing as a business, because it happens. So, again, it's kind of that cautionary tale of, even if you get to, having the profit that you want, you've got to sustain it. So here's some of the ways that in the Pinnacle process, we actually help clients hone in on sustaining. So one is an idea called one phrase strategy and differentiate activity. So what this is really about is that, can you state your strategy simply and really understand the key drivers of the business? Now, I love the example, obviously, especially those of you who got caught up in the Christmas mayhem at Southwest. I don't like this example. Yeah, and there's a lot of people in that category, but Southwest has a phenomenally clear and concise strategy that, most profitable airline, ever in the US. So right there, one phrase strategy simply is like wheels up, right? Boil down their strategy is all about that airplane utilization, flying their planes as many times a day as possible, more times than their competitors. And then the differentiate activities, right, gives Southwest the clarity they need to know, okay, we got to focus on these things, do these things, and not stray, into other activities. So like for them, it's like only flying Boeing 737s. So again, the equivalent for your business is that, again, don't be tempted to add other kinds of airplanes. We know that if we're really going to sustain this profit margin, we got to have, right, in this case, just one type of airplane. So do you guys have any way you've helped a client with something like this, kind of help them identify kind of that concise strategy and to stay on point even as they grow and not get tempted to maybe, add on some other things?
Yeah, I've referred them to you.
There we go.
So really, it's just, in our role as VCFO is to kind of challenge some of these things, because when these things aren't clear, they do spill obviously into the finances. And so we see it not only in sales, but we see it in the operations and all those kind of things. So all those great conversations we had on the levers to pull and everything, it kind of comes back to this a little bit. And sometimes it becomes pretty apparent that they don't have a one phrase strategy. They don't know what the differentiating activities are. And, but we're also, in our role, we understand that we're not always going to be the person that can solve for this now. And so we do bring in partners that are either, experts on the marketing side, if we feel that that's where a deficit is, or if there's deficits on the operating side. But in this particular one, this is where we bring in somebody like yourself, Tom, as a as a Pinnacle guide, because you're really good at helping clients kind of understand and talk through how to discern this kind of information for themselves. And then we can help them operationalize it and make them and show them what that's going to look like on the financial side once we, kind of have these things in place. So for us, it's more about just kind of unearthing it and deciding, whether or not they have one or not, and testing them on it. and then bringing in an expert if we need to.
Yep. Great. So another tool to help sustain profits, a concept called profit per X. I think probably the best way to come at this is to use what's called the constraints logic. So, right, there's a constraint in every business, and so this is one of a great exercise, to bring clients through. So, everybody's got target market leads, right? You're trying to get their attention, put them through your sales process, convert them to be a customer, and then in your delivering that service or making that product, there's always some constraint. So, the square footage of your manufacturing facility, how many shifts you run for that manufacturing facility, the number of people you have, the number of hours that they have, these are typically some of the kinds of constraints you see in the business. And I'll share a quick story on this. Recently, I was working with a janitorial services client of mine. I've been working with them for almost 2 years and had often heard about issues around them being able to hire, retain high quality independent contractors. And early in the day, this construct came to me and I was like, okay, I'm going to do this with them. I did it with them because it was like so clear to me that the constraint on their business, because they wanted to scale it quite a bit, was actually high quality independent contractors. So it was kind of like a light bulb going off for them, because it just helped them see that was the constraint, and that's really what they needed to focus on to get the outcomes they want. So how have you all helped your clients use something similar to focus on what's most important? Well,
Tom, with that client, I mean, they understood that was their constraint, right? They just didn't realize that's where they should put most of their energy. Is that?
Yeah, I think they hadn't realized that it was their number one constraint. I think they were aware of it and it was important, but there are other things that are important, but it just became crystal clear that, especially with a very aggressive growth vision and actually being in a metro market that and that actually has a let's say a lack of independent contractors or the kinds of people who would typically fill those in some other metro areas. It just became clear that they had a particular issue with independent contractors not being able to get enough quality ones.
Yeah. So the concept of a constraint is great, and how we usually leverage, and Kristen, I'm sure you have an example too, but how we usually do it is through those KPIs and through those conversations. So we're able to kind of show the client, and the client's like, well, I can't do that. And we're like, well, why not? Because you're able to do this and this is off. And so we're identifying those constraints without really calling it out specifically. And then again, they can either kind of unearth their own solution, and or that's whenever we say, well, we know somebody that might be able to help you with that, and we can help bring in somebody or another outside resource to kind of alleviate some of that stuff.
I feel like I have a really good example. I'll try to be quick here. So, but it's a marketing agency, and they basically have growth marketers that can only handle like 4 or 5 clients. So the clients that they get have to be of a certain size, otherwise it doesn't make sense. So all business isn't good business. You have to have it as of a certain size because you have the constraint.
It's a great example.
Yep. And Tom, actually really quick, that client of yours that's trying to whittle down that 20 KPI scorecard, you might want to use this with them and say, hey, what are, help them and identify where are their constraints, because that's
a really good suggestion. Yeah, I like that.
So then last item really for today, Flywheel. This is another really important construct in terms of, again, sustaining profit over the long run. It also connects back to the economies of scale, because I find working with earlier stage businesses, once they hone in, right, what's that flywheel, right, that they can keep turning and that they can get that cumulative momentum. And just really kind of scale up by doing these key repeatable activities consistently and really well over time. So, the book Good to Great, there's some other resources out there on how to construct a flywheel. Here's some examples, but again, it's another one of those tools that, if you can't state your strategy simply, in this case, really visualize your strategy, which also is also the operational, effectiveness and efficiencies we need to have, and the key activities and where we should be investing time, resources, including money, budget money. This is just a great exercise to do. So,
and just with this is an internal thing for you to just keep, that flywheel to keep the business going, but you can also use this externally. So we use this for anything that you want to annuitize from a business model perspective with your customers. Think about what your service delivery flywheel is. And so for us, we have meeting cadence of things that clients should always be checking in from a financial side of things. And that's how we've been able to build and sustain and really productize our service model. So think about that. And it doesn't matter what industry you're in, if you're just think about how you can continually touch the client that way. So it works externally as well.
Yep. Okay. We're getting ready to close things out here. So that's the Pinnacle model. We looked at profit today. So if you want to reach out to me, more than happy to interact with anybody about the Pinnacle model as a whole, what it's like to use these tools. So just reach out to me, and I've got this simple assessment you could take too, but more than happy to interact with anybody about any questions they have.
Excellent. Tom, thank you very much. I hope people would take advantage of that assessment, either for their own business, or they might recommend a client do that. As I mentioned, this is the third of three things, and I'm hoping some of the things people took away from this is some specific ideas you could get to help your business. But for me, kind of that power of having a business model that you can follow and kind of say, I'm going to follow this kind of path. And then for many people, having some kind of guide or consultant help them with that. And Tom, I mentioned that we work with you, and that's been really valuable, that external perspective to come in and look at things differently than how we do and say, I have a tool. Yes, you're telling me this problem. I've either seen that somewhere else, or here's a way you might want to think about that has been really valuable for us. So thank you for that. Adam and Kristen, thanks for joining today and contributing kind of how we leverage these kind of things with our clients.
Thanks.
One last thing I'll mention for people. So we did 3 polling questions. If you answered all 3 of those, you will get the CPE certificate, and also slides will be sent out to everyone who had participated. Thanks to everyone. Hope you guys have a great day.
You too. All right. Bye.
Bye-bye.